Good evening, everyone. Welcome to the overview of the new federal relief package. We want to first thank everyone for joining the call today. I know this has been long awaited, and we are now here at this moment where we can actually apply for the second stimulus package. This presentation is actually brought to you by the collaboration of the Small Business Administration, the Department of Economic and Community Development, and the University of Connecticut School of Business through the Connecticut Small Business Development Center. I'd like to, one, thank our other partners, the Black Business Alliance, the Bridgeport OIC, head coach of the Hartford Economic Development Corporation here in Hartford, the Hispanic Chamber of Commerce, as well as the SAMA, the Spanish American Merchants Association, in addition to the Black Chamber of Commerce as well. Thank you, partners, for all the hard work that you do and the tumultuous task that is ahead of us to help small business thrive and to secure their PPP. Give you a quick update on the unemployment updates as it relates to what has happened since the stimulus has been signed. Unemployment benefits has been extended to 50 weeks from 39 weeks through March 14, 2021. Additional benefits up to $300 per week through March 14, 2021 are in place, as well as the extension of the Pandemic Unemployment Assistance and the FFCRA leave benefits through March 14, 2021. Great things there for the unemployed. In addition to this, there's an update on the taxation. Many people have called in and asked, is this aid that we're receiving, is it taxable? The answer on the Tax Relief Act of 2020, it extended deferral of payroll taxes. Once again, that is an extension of deferral of payroll taxes due to the Tax Relief Act of 2020. Also, the expanded employee retention tax credit has also been expanded as well. PPP loan forgiveness for qualifying businesses does not need, and I repeat, does not need to be included in your gross income. That has been a major question of contention among small business here across our country. Our congressional delegation and Congress heard you and answered you by telling you that PPP loan forgiveness for qualifying businesses does not need to be included in gross income. Treat it as exempt income in partnerships and as corporations. No exclusion of deductions for allowable expenses covered with PPP loan funds. And the EIDL, the Emerging Injury Disaster Loan advances, would receive the same treatment. SBA renewed COVID-19 assistance. As in the past, the SBA still strives and continues to strive to help our small businesses of this great time of this pandemic. Through the Paycheck Protection Program, this loan program provides loan forgiveness for retaining employees by temporarily expanding the traditional SBA 7A loan program. In addition, the EIDL loan advance, many businesses received that early on in the first stimulus. That has been extended and included into the second stimulus. And this loan advance will provide up to $10,000 of economic relief to businesses that currently are experiencing temporary difficulties. And as always, SBA provides debt relief, and it's additional providing a financial reprieve to small business during the COVID-19, meaning if you have an SBA loan of 7A or 504 right now, the interest payments have been, you received a waiver, you have a reprieve. You don't have to pay that right now. That has been extended right now under the new act. Economic Injury Disaster Loan. What is the EIDL? The Economic Injury Disaster Loan Fund is an additional fund allocated. Under the EIDL program, it has been extended. Those who were able to participate in the CARES Act of 2020, we now know that the EIDL has been extended to December 31st, 2021. That is the new deadline to apply, which is December 31st, 2021. And what is included in EIDL? The EIDL program has been extended to provide loans to qualifying individuals, small businesses, nonprofits, which pending availability of funds. How much can you receive? Up to $150,000. What is the interest rate? If you are a small business in the United States, it is 3.75%. If you are a nonprofit, it is 2.75. Those numbers are still the same as in the CARES Act. The terms are up to 30 years. That is still the same. And the biggest thing, which I love, is the fact that you do not need any collateral. That requirement has been waived. So loans under $25,000 require, loans over $25,000 do require a personal guarantee. Main use is working capital. But the collateral for things under $25,000 has been waived. This is something that small businesses in our country asked for Congress in this new package, and they did hear you. They've extended it. They've waived the collateral requirement. They've still allowed you to go up to $150,000. I know many small businesses can use it. They've kept the 3.75 for small businesses and the 2.75 for nonprofits. And the terms are still up to 30 years with no prepayment penalty. Now, I'd like to introduce one of my colleagues who's joining me on the call. Michelle will take you through the PPP, which is the Paycheck Protection Program. I also want to acknowledge, before I go any further, that our Associate State Director is on the line as well. I know he is going to, with Matt Poliski, is going to talk about the question and answer period at the very end. In addition to, I have a great time introducing another wonderful friend and another wonderful partner that we all work with. That they help fund this whole thing of the SBA. And it is the Deputy Director of the Connecticut District Office of the Small Business Administration, Julio Casano. Been working with him for a long period of time and continue to work together. I'm glad that he's on the call. I'm glad that, Matt, you're on the call as well. And without further ado, Michelle, you take over and explain the Paycheck Protection Program.
Thank you very much, Joe. Good evening, everybody. I am going to be providing a comprehensive overview of the Paycheck Protection Program. There's a lot of information and details on the upcoming slides. And as Joe said, there will be time at the end of this presentation for question and answers. So let's get started. On January 7th, the SBA issued the first set of guidelines related to the new Paycheck Protection Program, and those guidelines are reflected in this webinar. Additional news includes the program will open for first-time applicants known as first draw applicants on January 11th and second-round applicants known as second draw applicants on January 13th through community financial institutions in order to increase access to smaller businesses who tend to use local community lenders. Two community financial institutions in Connecticut are processing the applications, and these are New Haven Bank and Nutmeg State Federal Credit Union. We have developed and continue to update a list of PPP lenders on our website, which you can access through our resource center under federal resources. In addition, the SBA just announced this evening that the PPP loan portal program will open to other eligible lenders with $1 billion or less in assets for first and second draw applications on Friday, January 15th. Julio, would you be able to say a few words about this announcement?
Sure. Thank you. And again, for the SBDC for putting this together and all of the partners that work with SBA and with SBDC, SAMA, the Chamber, BBA, all of them. We've been working diligently in the last couple of weeks to make sure that when this information was released, that they would be one of the first, because of the nature of the businesses that they work with are really small. These are your local mom and shop stores that are located in some of the inner cities of Hartford, New Haven, and Bridgeport. So again, thank you for all, and let me just briefly talk to you about what's been happening as of today. There was just a recent release that will be going out to the press and to the public that the program will launch the second phase of its early start, which was this past Monday. And understand that the nuances and the wording that has been coming out under this tranche of money of the new round is this thing called the Paycheck Protection first draw and Paycheck Protection second draw. Well, what does that all mean? Well, just briefly, what it means is that if you never applied for an SBA disaster loan under the PPP program, you're considered a first draw. That's what it means. Plain and simple. Julio's Bakery, I never borrowed back in March, April, May, June. I didn't even know the programs existed. If I went into a lender, if I called a lender, they would have to put me through this part of the program called the first draw. The second draw, then what the second draw means is that these are the businesses that already had the first draw. They actually had their first initial paycheck protection loan in round one, and now they're waiting for the second round, which will help their business to continue to survive in this environment. So that's really what it means. And so on Monday, as was just stated, the program was launched under a limited capacity because it was really made so that the smallest of the small have access to the loans first. And then this Friday, again, the smaller lenders, community development corporations, the CDFIs, micro lenders have access to begin to also lend to what I said was a second draw. These are for folks that are in need for the second tranche of money.
Okay, so to just go over some of the details of the program that is really focused on helping minority small business owners, you will see that there's been $15 billion across first and second draw PPP loans for lending by the community financial institutions I mentioned, New Haven Bank and Med Federal State Credit Union. $15 billion has been allocated across first and second draw PPP loans for lending by insured depository institutions, credit unions, and farm credit system institutions with consolidated assets of less than $10 billion. $35 billion for new first draw PPP borrowers, and $15 billion and $25 billion for first draw and second draw PPP loans, respectively for borrowers with a maximum of 10 employees or for loans less than $250,000 to borrowers in low or moderate income neighborhoods. The Small Business Administration has determined that at least 25% of each of these set-asides will go to each one of these groups, loans to borrowers with a maximum of 10 employees and loans less than $250,000 to borrowers in low or moderate income neighborhoods. So let's talk about PPP eligibility. So there's been some updated eligibility for the program. First-time applicants, if you did not apply for PPP funds before, you can do so now with this new bill. You can also apply for the maximum funds available to you if you previously returned all or partial PPP funds. The criteria for applying for first time remains mostly the same as before. Those who apply include small businesses, self-employed individuals, sole proprietors, independent contractors, or small agricultural collaboratives, nonprofits, including churches with 500 employees or less. There is expanded eligibility for some 501c6 organizations with 300 employees or less, as long as they don't receive more than 15% of revenue from lobbying activities. Local newspapers, TV, and radio stations previously ineligible due to affiliation rules with other stations with 500 employees or less are also eligible. Businesses that were not in operation on February 15, 2020 remain not eligible. Now, for those applying for a second round PPP, second draw loans, the types of people, businesses, and organizations eligible is the same as for the first round, but the number of employees is reduced to 300 or less. You must also demonstrate at least 25% reduction in gross revenues between comparable quarters in 2019 and 2020, and you also must have used all PPP funds before applying for additional funds. On the next slide, we will discuss the basics of the PPP loan program. While the overall program relies on many of the guidelines previously established, the Economic Aid Act does include some changes and distinctions between first draw and second draw applicants. For those applying for the first time, the maximum loan amount remains at $10 million. The second draw cap is $2 million. The basic terms such as the interest rate, maturity, collateral, or personal guarantee requirements remain the same and equally apply to both. Some of the allowable uses have been updated and expanded. This includes qualified payroll expenses, including health and leave benefits, payments on mortgage interest, rent and utilities, and covered operations expenditures, property damage costs, supplier costs, and covered worker protection expenditures. These loans are not intended to replace lost sales. In order to qualify for forgiveness, at least 60% of the loan must be used on payroll. The new deadline to apply for PPP funds is now March 31st, 2021. But again, keep in mind, we'll have to wait for the Small Business Administration to be able to release guidance and reopen their portals, and then allow time for lenders to process the loans and implement. In order to calculate the amount that you're eligible for the PPP loan, for first draw borrowers, you would look at the sum of your qualified payroll costs minus the sum of excluded payroll costs, and that's your total payroll costs. For non-seasonal employers, this means calculated at 2.5 times the average monthly payroll cost, up to $10 million for first draw or $2 million for second draw, either year one period before loan is made or calendar year 2019. It's important to note that any small business that has a NAICS code of 72, which are small businesses in the accommodation and food services, can request 3.5 times the average monthly payroll for the second draw only. For seasonal employers, you would calculate the payroll cost by multiplying 2.5 times the average monthly payroll cost up to $2 million for any 12-week period between February 15th, 2019 and February 15th, 2020. On the next slide, I will review allowable uses of the PPP loan. So some of the allowable uses have been updated and expanded. These are the expenses that you are permitted to use the PPP loan funds for. On the payroll side, you're allowed to include compensation to employees in the form of salary, wages, commissions, or similar, cash tips or the equivalent, any payment for vacation, parental, family, medical, or sick leave, except for the Family First Coronavirus Relief Act, allowance for separation or dismissal, payments for employee benefits including group health care or group life, disability, vision, or dental insurance, including insurance premiums and retirement, as well as SUTA, state unemployment tax. For an independent contractor or sole proprietor, you can include wages, commissions, incomes, or net earnings from self-employment or similar. For non-payroll expenses, it's important to note that there are allowable non-payroll expenses, but not all of these expenses will be forgivable. This means if you use your PPP funds, you're not violating the terms and uses of the loan, but you will have to repay those expenses. So you can use the PPP loan money for mortgage interest and payments, but not mortgage prepayments or principal payments, just interest payments, rent payments, utility payments, interest payments on any other debt obligations that were incurred before February 15th, 2020. This is an allowable use, but not a forgivable use. Refinancing on SBA EIDL loans made before January 31st, 2020 and April 3rd, 2020. This is for new PPP loans only. This is also an allowable use but not a forgivable use. Covered operations expenditures, covered property damage costs, if applicable, covered supplier costs, and covered worker protection expenditures. Again, these loans are not intended to replace lost sales, and the 60-40 rule remains. In order to qualify for loan forgiveness, at least 60% of the loan must be used on payroll. So, documentation that's needed to apply for the PPP loan. So you will have to provide documentation, includes eligible payroll records, or you can use the following documents depending on your business structure. Your payroll records, your payroll tax filings, your Form 1099 MISC if you work as an independent contractor, your Schedule C or F for self-employed or farmers, your Schedule K for partnerships, and income and expenses from a sole proprietorship or bank records. Businesses must provide a Form 941 or other tax forms containing similar information and state the quarterly wage unemployment insurance tax reporting forms for each quarter in 2019 or 2020, whichever was used to calculate the loan amount, along with evidence of any retirement and health insurance contributions. A payroll statement or similar documentation from the pay period that covered February 15, 2020 must be provided to establish the business was in operation on February 15, 2020. If you are staying with the same lender and using your 2019 payroll calculation period, you do not need to present additional information on qualifying payroll expenses. If you are applying with a different lender, then you would have to gather the same information as if you're applying for the first time. To document your eligibility based on the number of employees, you should be able to use payroll records as well. This next part is specifically for those applying for a second draw loan. You must prove the revenue decline. Overall gross income or revenue is defined as revenue and cost of goods sold as you would document them in your 1120, 1065, or 1040 form, depending on your business structure. And you show that you have already used all of your PPP funds for your first loan, or that you are on track to deplete them before getting the funds for the second round PPP. If you are getting a loan of $150,000 or less, you have until the time of applying for forgiveness or upon request to submit documentation that demonstrates your 25% revenue decline, but you must meet the requirement. This allows for a little more flexibility in gathering your documents without delaying applying for the loan. So let's talk about how you would demonstrate the revenue decline. As I said, all applicants for the second draw loan must demonstrate that gross receipts in any quarter of 2020 were at least 25% lower than the same quarter of 2019. The SBA has also made an alternative method to make it easier for some applicants that do not have quarterly documentation. Applicants may compare annual gross receipts in 2020 with annual gross receipts in 2019, and as required documentation, must submit copies of annual tax forms substantiating the annual gross receipts deduction. So for businesses operating for the whole of 2019, and this is the general rule, any gross receipts for quarter 1 through quarter 4 of 2020 must show a 25% plus decline, when compared to the same quarter in 2019, or choose the alternate annual method. Businesses not operating in the first quarter or second quarter of 2019, but operating in the third and fourth quarter, you can compare any quarter of 2020 to Q3 and Q4 of 2019 to show the 25% plus decline. In businesses operating only during the fourth quarter of 2019, you can compare any quarter of 2020 to the fourth quarter of 2019. And any business that was not in operation during 2019, but in operation on February 15, 2020, you would compare the second through the fourth quarter to the first quarter of 2020. And so now I'm going to talk a moment about forgiveness. So the 60-40 rule remains. At least 60% still has to be used on allowable payroll costs, and there are additional allowable expenses covered by this bill, which we briefly explained in the previous slide. The covered period allows borrowers to select their loan forgiveness covered period starting on the day of disbursement of the funds and choosing a time period between 8 and 24 weeks. There will be a simplified forgiveness for loans under $150,000. The process is still being determined, but this does also increase the SBA's ability to review and audit forgiven loans of all sizes. The process requires certifications to be made, as well as written documentation to include number of employees retained because of the PPP loan. And last, the EIDL advances no longer have to be subtracted from PPP forgiveness. And as we described in the allowable uses, there are now additional expenses for that 40% portion that expand what you can use the funds for. Now I will pass this back over to Joe to discuss the EIDL program.
Thank you, Michelle. The EIDL $10,000 advance is additional funds allocated. Eligible businesses in low-income communities that did not get the EIDL loans or the advance grants because funds had run out can now get $10,000. Businesses in low-income communities that received an EIDL loan advance can get a grant equal to the difference of what they received and $10,000. Eligibility updated to small business with 300 or less employees must demonstrate gross receipts loss of 30% or more during an 8-week period between March 2nd, 2020 and December 31st, 2021. I will repeat that because it's very important. Eligibility updated to small business with 300 employees or less must demonstrate gross receipt loss of 30% or more during an 8-week period between March 2nd, 2020 and December 31st, 2021, relative to a comparable 8-week period immediately preceding 2020 or during 2019. The SBA will release specific guidelines as relates to seasonal businesses. Again, no date yet as to when the portal will open again for the advance. Debt relief. The new bill extends the Small Business Debt Relief Program, Section 1112 of the CARES Act, which would defer payments of principal and interest on new and existing SBA 7A, 504, and microloan programs for eligible entities. The legislation states that this would apply to covered loans made prior to December 27, 2020, and payments would be covered for 6 months. There are additional provisions for further debt relief for some industries, but we are waiting for guidelines to be released to make sure we can provide the most accurate details. Please note, this will be done through your lender, and you will want to reach out once guidelines are made available. Grants for shuttered venues is another portion. Live venue operators and promoters, theatrical producers, live performing arts organization operators, museum operators, motion picture theater operators, talent representatives who demonstrate that at least a 25% reduction in revenues has occurred. There are specific requirements for different types of venues, and we encourage you to reach out for further details. As they are extensive and apply to a smaller portion of our audience. $2 billion is set aside for those with 50 full-time employees or fewer, but set aside only for 60 days. Allocation of funds. Initial 14-day period. Grants will be awarded to eligible entities that have faced 90% or greater revenue loss. This may include large chains. In the 14-day period, following the initial 14-day period, grants will be awarded to eligible entities that have faced 70% or greater revenue loss. After these 2 periods, grants shall be awarded to all other eligible entities. Very important. Now, how can the Connecticut Small Business Development Center help you? As I mentioned initially, the Connecticut Small Business Development Center works with small businesses to provide no cost. Now, repeat, no cost. Confidential advising, utilizing our team of advisors and network throughout the state. We work closely with our resource partners, including local economic development officers and chambers, to support our clients. We work with businesses in all industries at the start, growth, or exit stage, and pair our expert advisors or advising with a unique set of powerful tools that include market research, financial analysis, in-depth projections, such as financial projections for a business plan, and decision-making frameworks. We have developed and continue to update our COVID-19 Business Resource Center on our website. And our website is B as in boy, D as in dog, C as in cat.com. With the latest information on federal, state, and other resources available during this time. On this page are resources for state and federal guidelines, additional potential funding opportunities, and posters, infographics for you to reference, print, and share for various topics. Feel free to reach out for assistance to discuss options for your business, from pivoting to connecting better with customers, accessing capital, and working through these applications. Once again, here's our information. As you see, please reach out to us. We're on Facebook, Twitter, and Instagram at ctsbdc.com. I'd like to thank you for joining us today, and thank you for your patience and understanding. If we don't get to all your questions, feel free to simply go to our website or email any one of us at the team. Please note, these additional resources we are offering. As more details are released, we will be incorporating the information into upcoming webinars. So this is not your last opportunity to hear this again. We will post this information on our website, and we'll continue to send this out for those who are on our email distribution list. Please note, our next webinar on these topics is scheduled for January the 20th. I do believe there's a change. I think it's 11 a.m. and not noon. I do believe on that day.
You're right on that, Jeff.
Thanks, Matt. So registration can be found on our website. Please, I must encourage everyone in the sound of my voice, I think all 70 some odd people, you should all, if you're not a client of SBDC, you need to go to ctsbdc.com tonight and register. We will then assign an advisor to you to walk you through the cadre of information that we share with you tonight. You are not alone in this process. We are here to help you. And once again, in SBDC, we like to tell you this is free, free, free. Now, the last part, and we're going to open it up, is offering several different live question and answers. I think we're going to bring Julio back on, Cassiano of the SBA. We're going to Matt Polisi, my boss, to answer any further questions that you may actually have. But once again, remember, register. Go to ConnecticutSmallBusinessDevelopment.com. On the right of the home page, click on the Sign Up Now. That's the button you need to press. Sign Up Now button on the image that looks like the one you see displayed here to sign up. Once again, thank you for your time, and we're going to open it up for questions and answers.
Thank you very much, Joe. Good evening, everybody. So we have a bunch of questions coming in. Again, if you have a question, please, you can put that into the Q&A chat function, and we will get through as many of those as possible. So we'll start off. Michelle, this is for you. It's on PPP calculation for the loan amount. Can a new hire's projected pay be used as part of a PPP calculation? And so I think with the detail we have there, let's assume that the person was hired, recently in the last month or so. Would they be able to be part of the projected pay calculation?
So you would need to use your 2019, your 2020, or 12 months of payroll costs prior to your loan application. Those are the eligible payroll costs I would use.
And with that piece that under $150,000, a client might or an applicant might not need to submit new documentation to the bank. If there's been a change in terms of an addition to their payroll, then they would need to be updating those documents. The next question, Julio, this one is for you. It is on the reconsideration and appeal process around the EIDL loan. So we have somebody who's been waiting for a response on their appeal since May. And when they call the SBA down in Washington, they don't have an answer as to what the holdup is. Should they continue to wait, or should they submit a new application?
Please, submit a new one because of they will immediately lock you out because they are looking at applicants that have been submitting more than once for fraud or for issues of trying to apply for more than one loan. So keep with that original application. This is what you do. Reach out to the SCDC, provide them with the information. They will contact me, and I will attempt to get the research on behalf of both you and SCDC to get an answer as to why your loan or your appeal, which must have been for some reason that either was not accepted back in May. So but the only way for me to do that is to get information back to me. So the best way would be, because if there's issues that you need assistance, partner is SCDC. So working with them and us, we should be able to answer any question in the event that they're still looking for some information that was not answered or replied to.
Great. Thank you, Julio. So again, because I know there's a little audio issue, do not submit a duplicate application. That's something that can cause more complication for you. It could flag it as potentially fraudulent. So we have been helping many clients with the reconsideration and appeals process. So when you contact and speak with an advisor, you're going to want to have your EIDL loan application number or loan number and your business, as much information about your business that is germane, so that Julio will be able to communicate with Washington and work to look up details. So Michelle, we're going to go to you here on the PPP. They want clarification that in regards to the 25% reduction in gross revenues, a company doesn't need to show that quarter over quarter if the loan amount is $150,000 or less.
Okay. So I'm actually looking at the PPP second draw application now, and it does on the application show you have to select a quarter and list your gross receipts for that quarter in 2020, and then list your reference quarter for 2019 and list your gross receipts.
And that's for the second draw, so that's an important clarification. If you did not take advantage of the PPP program during the spring or summer when it was open, and this is the first time that you're going to take advantage of it, then you don't need to show that 25% reduction.
That is correct. They would have to go back to the 3508, which was the original form. It's on the website for SBA.gov. You can also find those forms on USTreasury.gov. So those forms are available. And then if you've never had a loan before and you just woke up one day and realized that, and I've had that issue where a business was doing well and they did not need any funding. The program shut down in August 8 because that was the mandate in Congress that program at a sunset date. And all of a sudden, come September, you realize that your business is still suffering and now you wanted to apply. Well, the program basically sunset August 8. However, the program as of this week reopened. And so you would apply under the the guidelines of what they call the first draw, which would be the original application, which, with that information would not have the different nuances that the new program, the second draw, has.
And Julio.
But also saying that, the good thing is, once you complete and use the funds under the rules of the first draw, you can apply for the second draw.
Right, that's really important. You need to make sure that all of your funds from the first draw are expended before you apply for the second round. But we had a lot of clients that, in the environment in the spring, everything was moving very fast, and they might have submitted a PPP application for the first draw, but then decided not to take anything. How would that business be treated? If they apply now, is that a first draw or a second draw?
That's a first draw. If they either return the money back, because again, honestly, some people will return because their CPA or whoever gave them, or family gave them, I wouldn't say bad advice, but told them that for some other reason to return the money. They have the ability to now go back to the original lender, first attempt the original lender, because they have all your documentation.
Right. That's a really great point. The original lender has all of your documentation, and so that's an expedited way and a reason to continue working with the same lender. I know a couple of weeks ago we had a lot of questions saying, do I have to work with the same lender? It was frustrating last time. I didn't like the process. It was confusing. I want to try somebody else. One of the reasons to stick with the same lender is they have all of your documentation, and that helps to expedite the process, makes it a little bit easier on the application side.
Yeah, there are no rules that say you could switch lenders. But the question is to go to your original lender because they have your documents. And so unless you love pain and suffering, so you're going to have to start all over again, then you will reach out to another lender. But for all intents and purposes, it would make it much easier, especially the lenders got better at it down the road. So if you applied back in April and May, you might have had a lot of pushback because the lenders were also just as confused as everyone else. Up to August 8th, most lenders were really into this program. They understood the rules very well. So things might have changed. So again, attempt with your first lender first.
Great. So, Joe Williams, maybe if we could start this off with you and Julio, if you could, support him with this. So, the question is on EIDL loan proceeds, and is that treated as exempt income? And so maybe it's worth clarifying the EIDL loan, how that money is treated, the advance, and then the PPP.
The EIDL is a loan. You never put as income a loan. It's not a property. You never carry it over as a loan. The PPP, when you first received it, your accountant would be putting it on your books as a loan. However, down the road, once the forgiveness process under the IRS ruling, the IRS originally made two rulings on this issue that you cannot either report it as income or as an expense, which basically meant if I borrow $30,000 under the PPP, at the end, chances are I might have had to have paid $30,000 in income, in taxable income, because it was going to be downstreamed into my income bracket. However, Congress knew that was an issue. And under the current act, they then modified the act so that both the income side of it is not reported, but you can carry it now as an expense. And so your $30,000, you could now go ahead and add it as an expense, which will basically improve. You would have less taxes to bear because of that.
Joe, anything you want to add to that?
No, I think Julio is 100% right. The way you are going to treat that is exactly what is now intended to do. You just have to understand the difference between the PPP and the EIDL. Both start out as loans. EIDL is a loan. PPP can convert. But we know that based on the legislation, the act that has been approved, it's forgivable, and you do not include that in your gross income. All right?
Great. So we have a question on the shuttered venue resources and asking for support there. And so just want to be clear, the SBDC, we are able to help nonprofit and other for-profit applicants for the shuttered venue resources. That program, we did not go into detail because we don't have all of those program details. There's actually a national webinar tomorrow at 3 o'clock that I know is already sold out, but we're working to do one, I believe, on Friday this week. So we will have that information out to our mailing list and on our website as soon as we have a date and time confirmed with DECD and the SBA. But the Shuttered Venue is a grant program that is being administered through the SBA. And one important thing that you may need help to decide in the Shuttered Venue is that you can either take the Shuttered Venues grant or you can apply for PPP. You're not going to be able to apply for both programs. So calculating how much each possibly covers for your particular organization based on your numbers is something that the SBDC would be able to help you with. Julio, anything to add on the Shuttered Venues program?
Yeah, and I know the launch of the program, especially on the presentation, is tomorrow. And all I just want to say is because this is different than any of the other programs. Talk to your professional because you have decisions to make. You have to make some serious decisions as to which will benefit you, the PPP program or the Shuttered Venue program. And again, I'm not a CPA. I'm not licensed to give advice when it comes to accounting methods, but please talk to your professional on that because one of those two programs should be beneficial to you. So just be aware of that, please.
Great, thank you. So on the PPP, there's a question that is if you applied, but I believe it's on PPP because they're asking about first and second draw, so I'll just add that. So if you applied and got denied, if you apply now, would that be considered first or second draw? And I think on its face, we need a little bit more information from the client here to really be able to accurately answer the question. When Congress enacted the CARES Act PPP portion of that, it was worded so that there'll be very few restraints as to why a business cannot get funding. So again, please reach out to your SBDC before you apply to make sure that what is happening or the reason the lender denied or withdrew your application is factual. So please reach out to SBDC. Great. Let's see. So this is an important piece as we're approaching the end of the hour. So if somebody received a $2,000 EIDL advance grant, are they eligible for the balance? That would be $8,000 to get up to $10,000. So, Joe, do you want to start off with that?
They are eligible. It states that in the new bill, they are eligible to receive the remaining amount of that $10,000. So they're making a whole. Remember, in CARES Act in the spring, the advance ran out of money. So the way Congress has decided to fix that is to allow those individuals that only maybe received $1,000, $2,000, $5,000 to receive the remaining amount up to $10,000, which would make them whole, and be able to apply under the new stimulus for an additional $10,000.
So the one really important piece that we need to add, though, here is that it's for eligible businesses in low-income communities. So during the first round, this was nationwide that the program was available. We don't have the specifics yet on the program, and so we're waiting to see what the definition is for low-income communities. So that is something that you have to watch for, and that's the only caveat to what Joe said there in terms of how it could affect you.
Just know that this week, PPP is the only thing for the majority of individuals on this call, because guidelines have not come out yet and not been finalized, as how the portal or the advance and how you really will submit. That is not up yet. So what you have to do is be a little bit patient, stick to the webinars, and as we receive the information, we'll roll that information and the new guideline as it relates to the advanced portion of the EIDL.
Right, SBA right now is on the idle guidelines, and again, some specificity being Congress wanted to assist those businesses that are in dire need located in low-income communities. So there will be guidance, there would be information as to mapping out your location to see if you would qualify under this program. And again, wait for the guidelines. Once they're issued, by all means, you could immediately see if you're going to get notified. And again, we don't even know the specifics. I don't even know the specifics as to how you will be notified. I would imagine that SBA already has your information, your data, your location, and so there'll be notices sent out. But again, until that's not on paper, I really can't say much about the program outside of what's written here.
Julio, here's a good question for you. So how do you contact the same lender for the PPP when the SBA has applicants go through a lender match? What if the match comes back with a different lender? So if they used lender match the first time, what should they do now for the second draw?
Oh, lender match. Oh, if you go to that match, you know who the lender is. If you don't know who the lender is, you speak to SBDC, they will call me. And I will find out who your lender is and let you know.
Yes, great. So if you used lender match, you don't have to use lender match again. You can go back to the institution that you applied with for the first time.
Yeah.
And as we're at the hitting the top of the hour here, I'm just going to do a couple of quick ones. So if you're self-employed or an independent contractor, can you apply for PPP? Yes, you can.
Both rounds. If they didn't get it on the first round, for the second thing.
Excellent, exactly. Michelle, if somebody started a business in October of 2019, can they apply for a PPP loan?
Yes, they can.
Excellent. Let's see. Michelle, can you provide some of the examples of covered supplier or operations costs?
So some of the operations costs might include software to run your accounting, your payroll, any software or cloud software in order to conduct your business operations. Supply costs also includes the cost of PPE, equipment for your business.
And Michelle, as well, did I cut you off there, Julio?
No, I'm here. I'm live.
What documents are necessary to prove the quarter? So what documents do you need for your quarterly revenues for second draw on PPP?
Well, this is the issue. Some of the small businesses might not be able to have that sophisticated mechanism of pulling this stuff out. So the guidelines are allowing you to do your year-end and draft. So if you have done your 2019, which should not be a draft because you should have already completed your 2019 tax returns, then your 2020 would be the other piece of it. And there you might have to prepare draft tax returns to make sure, especially if you're Schedule C and you had a Schedule C last year. Again, all you need is a Schedule C to be completed. That's what the lender's going to be looking for. If by all means you do not have the ability to do a quarter, say you wanted to do the first quarter versus the first quarter. Because if you really think about it, most businesses were shut down from March to June, which would be technically your second quarter. So you want to get benefit of the worst quarter. So for one, so you got to look at all your different quarters. So if you lost 25 or 30%, if you did your whole number for the whole year, you should be able to come up with almost the same number. But again, have the ability to do the whole year, 2 year, or quarter to a particular quarter, and then you could work with the SBDC. They could help you out. You could contact your CPA. You could contact one of the other partners at SBA, SCORE, the Women's Business Center. Not resources for you to get that information to help you understand the complexity quarter to quarter or maybe year-end to year, full year numbers.
Great. And the other piece is if they're applying for the second draw on the loan amount is under $150,000, there's a box, there's a checkoff on that's basically an attestation that they can demonstrate the 25% reduction, but they don't need to provide the documentation at the time of application, but at the time of forgiveness.
At the time of forgiveness, they're going to have to provide the information. So just be aware that either you're going to do it now or when you supply your information to the lender. The other thing also, I just want to clarify, you have to keep records of everything you've done for the next 4 years because this is taxpayer. This is not money that's just coming out of the woodwork. This is actual federal funding that's basically being paid by taxpayers. And as a result, you have to keep records because the SBA or the federal agency, IRS, can come back 2 years from now ask for proof and paperwork as to how the funding was used. So specifically with SBA, they, under the Act, have the right to go forward for 4 years on your tax return.
Great, thank you, Julio. So we're already past 7 o'clock. So I just want to wrap things up with saying I know we couldn't get to every single question today, but again, SBDC, and there's many other resource partners that are available. So if you have 1-2 quick questions, our small business help desk, which runs Monday through Friday at noon, as well as we have some early morning and some evening hours during the week. It's not a webinar, it's a drop-in, so you can ask that 1 or 2 questions that you need so you can figure out how to move forward instead of having a full advising session. But I also just want to thank Julio, the Deputy Director for the SBA, for joining us this evening. And I also want to thank all of our partners. Besides the SBDC, all of these other agencies that co-sponsored this event tonight, the Black Business Alliance, the Bridgeport Opportunities Industrialization Center, HEDCO, the Hispanic Chamber of Commerce of Greater Bridgeport, and SAMA, the Spanish American Merchants Association, and the Southern Connecticut Black Chamber of Commerce. If those are your go-to business support service in your neighborhood, if that's the person that you have a relationship, start with them. They're here to help you, and whether that's then directing you on to the SBDC or another resource partner for assistance, we all want to see everybody take advantage of all the financial resources that we can and have your business be successful and survive this time right now. So thank you very much to our partners. Thank you, everybody, for taking the time this evening. Have a good evening. Good night.
Good night.
Right.
Thank you.